want to dig into all of that and the market reaction this week with Bloomberg's equities reporter Carmen Reinicke, who has been across this story day in, day out. Carmen, why are we seeing this ongoing pressure on some of the biggest winners?
Yeah, it's really interesting, and like what a week it's been, right? You know, we have Nvidia with this blowout earnings report and then 2 down days immediately following it. Really what seems to be happening is there are so many macro pressures on the market right now that's adding a lot of weight and dragging down the major indexes. But at the same time, we're seeing that Nvidia's report, as good as it wasn't enough to quell some of these overall AI fears, right? And so we're seeing a sell-off, we're seeing a very risk-off mentality in the markets right now. And one thing that has been kind of interesting is looking at the stocks that are up today.
Yes.
We're actually seeing Apple outperform, and it usually has lately sort of been opposite of these big AI names because it doesn't have a huge AI piece of the puzzle. And then we're also seeing Google up, which is still really big optimism after Gemini 3. So it's just interesting to see a little bit of the split that's happening there in the market.
And much of this, of course, has been built into the worry about, yes, Nvidia has the demand. People starting to dig into accounts receivable, into inventory, but that felt like a desire to try and, in retrospect, understand why we were seeing a sell-off rather than seeing that and then seeing a stock sell-off. So can you talk to us about how things are happening in timing-wise?
The timing has been so interesting, and I think you're totally right that I speak to a lot of investors and people were sort of pulling on different things, but there was no real smoking gun great answer as to why, we were seeing this sell-off. But we have been seeing the market sort of react more to things around a Fed cut, if there's going to be a rate cut in December. So this morning, looked like things were kind of positive, and then around the Williams comments, but then, we get Mish out. And so it just seems like there's a ton of macro, and that is really what's moving the market.
I think one discourse that has been throughout is debt. And debt, particularly among players like CoreWeave in the neo clouds, but Oracle in particular. The CDS, the credit default swaps of Oracle, have become almost like a way in which we show anxiety in the great debt pile-out of certain companies. Is it rational? No one thinks Oracle's suddenly going to default, but it is being used as some sort of hedge here.
Yeah, totally. And I mean, the stock has just completely fallen off. It had that huge jump, and then we've erased all of that. And the debt question is a really big thing on investors' minds. And I think it really plays into the fears of the AI bubble, or the debate around it being a bubble, because if these companies start loading up on debt, there's the potential that they could become over-levered. That could be a bigger issue down the line. And with everything as circular as it is, even though these companies keep addressing it, Jensen spoke about it in Nvidia's calls, investors are just not convinced yet. They're just seeing the house of cards. They're worried about it.